Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwago. On the show today, land seizure talks hit South Africa's farming industry. And Zimbabwe's new finance minister set to clear World Bank arrears. Plus, Unilever new shares to start trading in December. Well, let's get the show started now with the markets. And trading day in Africa was bearish at intraday as most of the major markets were down. South Africa's JSE index led losses by 1.41%. And here in Nigeria, the market continues to drop with the all-share index down 0.7% at midday. Egypt dropped 0.71%, while Kenya closed in the red 0.75% on Monday. And in the Middle East, only the Dubai financial market faltered at intraday. The others were in the green. The market was down 0.58%. However, Abu Dhabi was up 0.13%, Qatar up 0.42%, and Saudi Arabia 0.13% up. And in Europe, markets traded cautiously higher in the morning following some of the positive momentum seen across other global assets. Investors are also monitoring remarks from the EU's Brexit chief. He told an audience on Monday that a Brexit deal could be reached in the next 6 to 8 weeks. Let's talk more about this and other developments with Conrad. Good afternoon, Conrad. Thank you for coming through to us today.
Good afternoon, Jimmy. I hope it's a sunny day in Lagos.
It is really hot today. Surprisingly, yesterday it was raining. Anyway, the Brexit discussion is gaining heat as Theresa May faces growing opposition in her own party, and London's financial world is nervous about losing its prime position to places like Frankfurt or Paris. What's going on?
You know, despite those positive remarks that you just told our viewers about coming from the European side negotiator in the Brexit negotiations, more and more people on the financial markets are getting prepared for a hard Brexit, for a no-deal Brexit. One clear sign for this can be seen on the bond market where, you know, issuers of new corporate bonds include in the terms of those bonds more and more warnings about a hard Brexit. TUI, for example, the travel operator, when it came to the market with a new corporate bond, warned that some of its vacation flights might be grounded after a hard Brexit because of regulation limbo. The University of Cambridge, when it came to the market with a new government bonds, trying to tap the markets, of course, the Cambridge University remarked that the supply of fee-paying students coming to Cambridge from the European continent might run dry. Those are not simply press releases, those are statements, that's wording in the prospectuses of new corporate bonds. More and more also, those companies issuing new bonds include in the terms that they might easily switch legislation and the jurisdiction after the Brexit might become a hard one. This means that the issuers of bonds, just like this, could decide to change the jurisdiction from London to the continent. And also here on the continent, our legal authorities are getting prepared for this, both in Paris and here in Frankfurt. New legal courts have been established, English language and English law courts ready to take over financial court cases in English in case that we see a hard Brexit, which would of course end the jurisdiction of London over many financial products.
All right, let's look at some corporate news coming in today. No Frills airline Ryanair has announced to ban the media from its annual shareholder meeting. Can they really do this? What's the reaction on the trading floor?
Well, legally, there's not much we, the media, can really do. There's a Freedom of Information Act in Ireland. This is where Ryanair has its legal seat. But this Freedom of Information Act only applies to government information, not to corporate information. That's of course no consolation for people here at the stock exchange, because this is really a blow to the whole culture of a publicly listed company. A company listed on an open market at a stock exchange should regularly inform the public about what's going on, and not only via press releases but also by allowing the media to cover general shareholder meetings. Now why is Ryanair doing this? Well, unions all over Europe, pilots unions, cabin crew unions, have announced new strike action. And today Ryanair even told the pilots here in Germany that it might close down some of its German bases in case the pilots would again go on strike. For sure, some of this is going to be discussed at this shareholder meeting, and some of those discussions might become quite embarrassing for the management of Ryanair. This is why they excluded the media.
Interesting. Anyway, how much of the Unilever corporate restructuring do we know, as the company has set December deadline for its shares to start trading?
Well, the company, which used to have, and up until now still has, 2 legal seats, one in the Netherlands, one in the UK, will only have 1 legal seat in Amsterdam in the Netherlands. Remember, Unilever thought about changing its corporate structure, this 2-headed corporate structure, after a hostile takeover bid by Kraft Heinz last year. Now it's chosen the Netherlands as its legal seat because, quite obviously, the legal structure of this new holding in the Netherlands makes it more easy to fend off potential hostile takeovers. The shares of the new company will still be traded and listed at the stock exchange in the Netherlands, in Amsterdam, and also in London, and also in New York, in the form of American depository shares. There's going to be a shareholder meeting in the Netherlands on October 25th, and one in London 1 day later, because the shareholders still have to agree. And if they agree, the last trading day of the current Unilever shares is going to be the 21st of December, so that trading in the new Unilever shares can start on Christmas Eve, December 24th.
Well, we'll look forward to see that happen. Thank you very much for your time, Conrad, and enjoy the rest of the day.